Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York on Thursday, the 16th day of October 2014, and this is the daily report for gold and silver. Nominally lower pricing in the precious metals markets except for palladium. Palladium down about $24 on the day, with the equities markets trying to stage some sort of a comeback, and the dollar, although lower on the day, attempting to find some support also. First to gold. Current print on the screen, roughly 1239 and change. That is off of a low of 1235.90 and a high of 1244.40. Silver also tracking lower on the day, off roughly 5 to 6 cents, 1737. Current print on the screen. The low today 1721, high 1751. More on silver in a little bit. Tremendously interesting day as we look at the equities and the dollar and see if the tremendous correction that we have been witnessing in both markets is ceasing in either of them, if we're finding any kind of support. We are in the S&Ps trading lower on the day, although when you look at the open compared to the close, that is a green candle, so it is higher on this daily chart. However, what we are looking at is this low that in essence has breached 1820. It has really come back up to 1850, so moved 30 points off the low. But nonetheless, we need to see if this is any kind of a point in which we can attempt to find some sort of support. As far as gold goes, I'm looking at a 720-minute chart. Now, we had a low today, 1234 and change, and I draw your attention right now to our shorter term, the shorter term 38% retracement at 1221. We see that that has held. The longer term 23% retracement is 1234, and these are just different cycle lengths. So my question is whether or not we'll find some sort of support at 1234. That is the current area where we could in fact find support. Now, in terms of resistance, that intraday high at 49 the other day still is holding water and holding weight, as we've been unable to take that out. So on a very, very short-term basis, we do have resistance at around 51. We have support at 1221 and then again at 1234. So there's no doubt we have a couple of givens right now within the market. And the first thing that we have to absolutely give some credibility to, and let's go ahead and blow this chart up. It's a weekly chart, COMEX Gold. Let's size that as best we can. And as we've talked about throughout this week, really the predominant factor as far as I'm concerned is this triple bottom. If we look at our weekly chart, these last 2 weeks, after hitting that bottom roughly at 1184, I believe, the market has absolutely come up. We've talked about the fact in terms of different levels of resistance that this former support line that was created with this compression triangle, the lower of these two lines, this in fact could become some sort of resistance. The other thing that is very, very clear to me is that the last two occasions in which we've seen this market trade to 1180, we have seen a subsequent rally follow $200 in this case, and in this case we went from 1180 up to, I believe it was about 1390 if I'm correct, and then we had this lower one at 1344. So we've had a series of lower highs, and that's really where the compression triangle comes in, although we can really draw it from back here. And at the same time, we've now hit this triple bottom. So what I am trying to ascertain is whether or not this rally will bear the same kind of fruit, so to speak, that we've seen on the last two subsequent times the market was trading at 1180. But we have to look a little bit deeper because we're noticing some real similarities to what we saw back here in 2011, 2012, up to about 2013, in which we had a defined range of 1534, 1535 on the bottom, and about about 1800 on the top. And really, to view those similarities, I've brought up this 2-day chart. It's in standard candlestick format, but I've kind of grouped them very, very close together because what I'm trying to look at is overall patterns. And what I'm speaking about is that back when we hit our record top at 1920, market comes barreling down, hits the first of this bottom being at just above 1500. The second time it hits it, it comes back up and stalls again at 18 here. And then on the third occasion that we see this market hit and test this bottom here at 1534, we have a subsequent rally that breaks above this long-standing resistance line, but most importantly, falters once it hits a triple top being right here. From there, we go back and test this for the fourth time's a charm, and the market breaks down substantially very, very quickly to go to these new lows at around a 61% retracement of the move from what? About $600 up to $1,900. Now, the reason I find that to be similar to what we're witnessing is although we haven't had these clear-cut tops as we did here at 1800, we've had a succession of lower tops, but nonetheless, they're roughly in the same area. This being just above 1400, this being just under 1400. This one, of course, this last top really coming down, I think we were looking at what, about 1341. At the same time, once again, we've got this flat bottom. So my question is, just like in this particular time slot where we saw it test and then at some point absolutely fail to take out any of these highs here, because we would have to start seeing it take out some of these highs before we actually got bullish. But are we going to see it falter and then break and possibly even break to new lows? Or have we seen some sort of real base forming in terms of the big picture? Because again, a case can be made for this 61% retracement at, call it 1167, but roughly call it 1180, because we're really, really close on these bottoms. So will this bottom hold? Because if it does hold, in fact, what we could be looking at, and I believe this to be a fairly large stretch at this point, but nonetheless possible, but we have this tremendous rally. We have the market then retracing 61% over a protracted period of time and then moving up to higher pricing. There can be a case made for this model on a technical basis. On a fundamental basis, my sense is we will still probably look to see this most recent move as a counter trend to the overall bearish trend, because the bearish trend has really been in play when we consider the fact that 1900 was hit roughly middle to the end of 2011. So we had 2012, all of 2013, and the majority of 2014 that we're going into actually trading lower. So we've had this bear market now for a sizable amount of time. In terms of years, we're looking at approximately 3 years. And in terms of the dramatic rise, if we start our rise really at the end of 2008, you have 9, 10, 11. So we've had this 3-year rise and 3-year fall. Typically, we don't see a scenario that has the equal rise to fall in terms of time duration. We typically will see something like 7 up, 3 down, or 6 up, 3 down. We get that those Fibonacci numbers coming in. We're not getting that here. So that's really our quandary right now. In terms of our direct strategy for our current trade, we're long at 1208, so roughly $30 from this point. My sense is I really want to see how this market reacts, say, over the next day as we go into the close or the weekend. And if we see that this particular low here at around 1234 holds, we would probably raise our stop up from 1218 to just below 1234.